What will happen to the housing market when mortgage rates eventually come back down? Now, from what I've seen, there's two camps of people out there. There's people who think that home prices are bound to come down regardless of where mortgage rates are at because home prices have shot up over the past few years. And then there's other people out there who think that once mortgage rates start to come down, that we're going to see home prices shoot back up, potentially at the same rate that they did in 2020 through 2022. And I tend to lean more towards that second camp where I do think initially, once mortgage rates come back down, that we will see home prices go back up. But I think that's only short term. I think once they stay around the 4.5 to 5.5% range, that's going to bring more stability to the housing market. It will actually bring more inventory to the housing market, which is something that we desperately need. I know here in Vermont and many parts of the country, we need more homes. And I think lower mortgage rates will bring that despite more buyers being able to qualify for those homes. So before we get into it, my name is Liam O'Reilly. I'm a realtor with Jerry Riley Real Estate. If you have any real estate needs, reach out to me directly. I'd be happy to help you. And all my contact information is in the description there. So let's get right into this here. We're starting off with Redfin's weekly housing market update to understand where we are and where things could head once mortgage rates come back down. So if you've watched my videos in the past, you know that Vermont is still relatively competitive. There's still a lot of multiple offer situations going on. Now, it's not every home. I'm not going to go too deep into it, but overall, homes are coming off the market quickly. And apparently that's the same thing in Miami and many other parts of the country. But you have this Redfin agent here quoted in this article, and she says, all of my recent listings have gone under contract in under 10 days, and most of them have received multiple offers. So still very competitive in Miami. This is despite around a 7% mortgage rate. And median sales price across the country is climbing. So it looks like we're going to hit that 2022 peak, at least with where things are trending now. And this is really a seasonal statistic where the median sales price tends to be higher in the spring. More people are buying, more people are selling in the spring compared to the winter. And so that's why we're seeing this upward trend like we saw in years past. Now, inventory is rising as well. So where are we here? New listings of homes are up, so more people are listing their homes right now, and average or active listings of home for sale are up as well. This is the inventory. This is the number of homes that are on the market. So both of those are up. Now, if mortgage rates drop, and I just want to be clear, when I'm talking about mortgage rates dropping, I'm not talking about them going back down to 3%. I really don't think we're going to see mortgage rates come back down to 3%, maybe ever, but certainly not anytime in the near future. And so when I'm talking about mortgage rates dropping, I'm talking about between that 4.5 to 5.5% range. But I think really the big threshold will be when we get below 6%. When we see a mortgage rate that's lower than 6%, that's when we're going to start to see changes in the housing market. Now, in the short term, I think this active inventory is going to get eaten up by the buyers who are waiting on the sidelines right now. If you've been following this channel at all, you'll know that there's a lot of potential buyers out there who want to buy a home but can't afford to because of where prices are and where mortgage rates are. The monthly payment is just too high. It's actually at an all-time high according to Redfin. They have this chart here, housing buyer payments up 9.8% year over year, and this is higher than the 2023 peak when mortgage rates were at 8%. And the reason why it's higher is because the median sales price and the median asking price are all much higher than we saw back in 2023. So people are paying more. The house payment that people have to make on these homes is higher today, and we're still seeing the median sales price climb. We're not seeing the median sales price go down. So when mortgage rates eventually start to come down, we will see that active inventory start to get eaten up. And I think at the beginning, we will see more bidding wars. It will be more competitive out there, and more people will start bidding over asking price to get the home that they want because they can now afford to do that with these lower interest rates. I think that's only going to be for a short term, because while there's a lot of potential buyers out there, there's also a lot of potential sellers. There's people who want to move up. They want to sell their home and they want to move up into a bigger property, but they can't afford to do so because they've locked into a 3% rate. Now, when that rate gets down to 5.5% or 5%, somewhere in that range, I think a lot of those buyers are going to take a look at what the mortgage payment will be for a larger home, how much equity they've accumulated over the past few years, and decide to list their home. So that will bring more inventory to the market, which sure, they're going to be buyers in the market as well because they want to sell their home and buy a new home. But overall, that increased inventory, the unlocking themselves from the current home that they're in, will bring more opportunities to the market across the country. Now, what I think we'll see as well is I think we'll see building start to increase as well. So here we have the housing starts data, and you can see here, even with these high mortgage rates, building is still above the 10, 15-year trend that we saw after the great financial crisis. We see building was very low from about 2009, 2010, all the way up until 2019, where we were building at rates that are lower than what we're building today. So although we're not building as much as we were before 2008, we're still building more than we did over the past decade or so. And I think once mortgage rates start to come down and builders see that there's a buyer out there who can pay for the property, that the product that they're bringing to the market, more builders are going to start building, and they're going to bring more inventory to the market on top of that, on top of builders taking advantage of where rates are and where buyers are when rates come down. Zoning restrictions have started to ease up across the country, which hopefully should make it easier for more inventory to come to the market. So I think in the long term, if we see rates stabilize at that 4.5 to 5.5% range, that's going to bring more inventory on the build side. It's going to bring more sellers out to the market, and I think it'll eventually stabilize the market. And the reason why I don't think it's going to cause home prices to shoot up as drastically as we saw in 2020 and 2021 is because when we take a look at where some of these consumers are, so this is the credit card debt at all commercial banks. This is the chart out of Fred. Again, the links for all this will be in the description if you want to take a look at this yourself. But credit card debt is at an all-time high right now. So obviously, if you've read the headlines and have been paying attention to the economy, inflation is high. People are putting more of their bills onto credit cards because it's tough to afford the cost of living, and their balance sheets aren't as great as they were during the pandemic. If you remember back in 2020, the government was handing out checks to people. People didn't have to pay their mortgages. People didn't have to pay their student loans. So even though those items like mortgages and student loans they still counted against them on their when they applied for a mortgage. So that debt to income ratio, those loans would count against these borrowers. They still had more cash in hand. They didn't have to make these payments. Things were cheaper, and they had enough money to spend. Now people have less money to save. They have less money to spend. They're putting more on credit cards. So the number of buyers that are out there right now, while there's still more buyers out there than sellers across the country, there's less buyers today that are in a financial position to purchase a home than there was back in 2020 when we had all the stimulus going, rampant throughout the economy. So I think that's part of the reason why I think we're going to see mortgage rates stabilize is the buyers, while they're well qualified, while they'll be better qualified to purchase a home, they aren't going to be, their balance sheets aren't going to be as robust, as attractive as they were back in 2021, 2022. Now, I also wanted to take a look at this chart here, which talks about what home you can afford at the different monthly payments. So this is assuming you're putting 20% down, getting a 30-year fixed rate mortgage, have 1.25% property tax, and 0.5% of homeowners insurance. So with those things in mind, at a $3,000 monthly payment, you would be able to afford a $442,000 home. So, below the median sales price here in Vermont, the median sales price in Vermont's at like $560,000. Now, when rates drop, if they drop to about 5.5%, then that same borrower at the $3,000 monthly payment will be able to buy a $500,000 property. So they're gaining about $60,000 in purchasing power just by mortgage rates dropping by 1.5%. Now, that is significant, and it is going to cause people to jump into the market, but it's not nearly as significant as if rates were at 3%. If rates were at 3%, that same $3,000 monthly payment could buy you a $620,000 property. That's $180,000 in purchasing power that you get when mortgage rates are at 3% compared to 7%. So very significant. Not that $60,000 is not significant, because it certainly is at that 5.5% mark, but there's just not quite as much purchasing power with a 5.5% rate compared to a 3% rate. And so for those reasons, I think what I speculate will happen. And again, if you disagree, leave me a comment. I love learning from you folks. If you have other data that I'm not considering, leave me a link in the description. I would love to take a look at it. I would love to make a video about it. But I think for those reasons, when mortgage rates drop, and they're not going to go back down to 3%, at least that's not what I see. But when they drop to that sub 6% range, we're going to see more buyers come into the market. It's going to make things harder at first, but then we're going to see more sellers come into the market. We'll see buildings start to pick up, and I think we'll see things start to stabilize and balance out with these lower mortgage rates. So anyway, I hope you guys enjoyed the video. Thank you so much for watching, and I'll see you in the next one.